bank right now. But as you pointed out, it's a very stock-specific market today, so let's get started with that. This is our Inside Edge segment. Patanjali Foods, that's the stock on our radar, acquired the entire non-food business from Patanjali Ayurved for 1100 crore rupees. Mangalam, tell us more details about this deal and what did the management say?
Well, a couple of things. One, the deal was underway that everyone knew because the company had already told the exchanges and told us here on CNBC-TV18 as well that over a month we will go ahead and do that. Now that the deal has happened, the street was awaiting more details of that deal. The stock is under pressure right now, but remember over the last few trading sessions, we've seen a big move in the stock already. So maybe some bit of profit booking is what we're seeing post the news. What is basically the deal? Patanjali Foods, which is currently the listed entity, has gone ahead and bought the home and personal care business of Patanjali Ayurved. Patanjali Ayurved has revenues of almost 6,000 odd crores, of which the home and personal care business, which is basically the dental care, skin care, hair care, home care businesses, have a revenue of close to around 2,800 odd crores. So this is what goes into Patanjali Foods, which is the listed entity. How much do they pay for that? 1,100 crores is what they pay over 5 tranches. And additionally, they also pay 3% of sales with a minimum guarantee of 83 crore rupees per year for the next 20 years as licensing fees. For which, what is it that they get? Close to around 2,800 crore revenue, as I pointed out, and this compares with their own revenue of close to 32,000 crores. But it's the EBITDA which makes it, a lot more attractive because they do EBITDA of close to 500 crores and margins of 18%, as against the food and oil business, which does margins of just around 4% and an EBITDA of around 1,300 crores. So if you adjust for the 3% royalty that they are giving, the deal adds 8.5% to sales and 32% to the EBITDA itself. The 3-year CAGR of this business is close to around 6.5%. And here's where it gets a little more interesting because the management joined us on CNBC TV18 this morning, and they said that dental care, which is Dant Kanti, is around 1345 crores of sales with 24% EBITDA margins, and that is the mainstay of the company where they do enjoy strong market positioning as well. And the way they've grown both the foods business and the biscuits business from Patanjali after acquiring them over the last 2 years is something that they aim to replicate in this business as well. They were growing at 6.5% CAGR. They believe this business can grow upwards of 15%, just the way they grew their biscuits and food business over 50 to 60%. And not only are they likely to grow the revenue faster than its earlier growth, they will also improve margins by nearly 200 basis points over the next 12 to 18 months. And that would imply that, the license fee that they're paying, about 3%, will come down to just about 1% because of the 200 basis points synergies that they will be attracting on this business itself. The stock currently lower, but has seen a big move. In fact, yesterday as well was up around 7 odd %. So let's listen into what the management, the CEO of the company, Sanjeev